Today's video is on TSLY. It just had a dividend cut. I'm getting a lot of questions about it in the comment section, so I'm going to share with you how I'm playing that fund. We're also going to talk about APLY and how I'm playing it after the Apple earnings. Also, we'll talk about IEP, the Carl Icahn fund that's been in the news a lot lately. And last, we'll talk about how I pay my bills on margin since we just got paid our dividends. We earn about $9,000 to $10,000 per month in dividends. As you can see here, we are also outperforming the market. We're up 19% for the year. The Dow's up 1, the S&P's up 7, and the Nasdaq's up 16. We're outperforming the market because we tie everything to the indexes, as I always say. So we're using this margin as well to get more outperformance. This margin of 257,000. Not only am I using that to get more income, as you saw, that 100,000 per year in dividends that you saw before, I'm using this to get more income as well as to get more performance, because if I just buy more index related names like Cornerstone or USA or JEPI, then whatever the market does, I'm going to get more performance. And since I have more leverage, obviously more margin leverage. So this is how I'm getting my performance and dividends. I'm tying everything to the indexes. And TSLY and APLY are some of my new favorite funds because they are in the indexes and represent large parts of them. Go see our past videos if you want more information on how TSLY works, the cover call fund, or APLY, these cover call funds. If you want more information, see those videos. And also if you want to see how they comprise the indexes and how I go about it because of their allocation in the indexes, go see those videos. So as you've seen from those videos, Apple, it represents about 10% of the Qs, and TSLY represents almost 4% of the Qs. So having 10,000 in each of those funds is actually underweight for me. See, I have 10,000 in APLY, as we can see here, APLY. I just added to this on the earnings announcement this Friday, and 10,000 in it. So that's actually underweight, because if it's 10% of the Qs, well, 10%, 10,000 on 100,000 is 10, and I have 400,000 roughly in here, so we're still way underweight APLY and even TSLY. TSLY we have about 7 grand in, as you see here. TSLY below, we have, if we scroll to the right, which it won't let me right now, but if you'll see that I have 8,000 in TSLY. So I'm trying to get that up to 10,000 as well, because I would still be relatively in line with the indexes. So that's how I'm getting my performance. That's how I'm also getting my dividends, my estimated income, up to such a high number, because I tie everything to the indexes, and these Yieldmax funds help me correlate to the indexes even more. Now, obviously, when the stocks fall, my performance is going to fall, but that's okay because I'm just performing in line with the market as long as I keep the allocations correct. So I hope you hear that. By the way, if you want any more help on margin, please email me at aikentod48@gmail.com. I have e-guides if you're interested that'll help you get your mind around margin, how I live off of dividends in my account. Also, I wanted to point out OARK. OARK has been a strong performer for us in the portfolio the last few days. It was up 4% on Friday alone, and that's because Tesla is moving higher and Shopify. We've done videos on how I'm playing Shopify through OARK. OARK just accomplishes so many needs for my portfolio. Not only is it tech exposure, but it gives you all of the high-flying Corona tech names that you don't want to have FOMO on. So OARK, 40% dividend, loving that fund. Doesn't matter if it goes up or down. We just care about the dividends. Same for TSLY. Yes, they cut the dividends on TSLY, but we don't care, or I don't care at least, because I'm still getting paid about 40%. And as long as I hold this for less than 10 years, I get paid back my full position. So 40% dividend times, let's say, 3 years, and in less than three years, I'm paid back in TSLY. That's how I'm playing all these stocks. No matter what stock I talk about, Zim lately, or Goggle, or BHP, Mo, MPW, which is a stock that one of my subscribers brought to me. I'm very thankful to him for that. MPW does healthcare, 13% dividend. I was going to do a video on it, but I don't have much money in it. But $1,000, 13% dividend, 30% maintenance, loving that, as well as PDI, which another subscriber brought to me. I've always known about PDI, but I admit that I lost track of this one because it's a 3-star fund on Morningstar, but the yield was too high to pass up, about 15% yield there for PDI. So I have 5,000 in that. Plus I'm bullish on bonds right now because interest rates are falling pretty soon and the economy is slowing some. So that's the perfect play for bonds, as I've been saying in past videos. Check those out if you're interested. Also, I doubled down on APLY because of that $90 billion buyback news. So I was waiting for the earnings clarity. We got the clarity. The stock didn't fall. So I completed my position in APLY with 10,000. Gonna buy TSLA on any weakness so I can get my income back up. Anytime I see dividend cuts, I just keep buying. As long as the stock's doing okay, I don't mind buying and rebalancing my position back to 10,000, which is what I'm gonna get it up to again. So I actually wouldn't mind having 10,000 in each of the FANG names. Facebook, Apple, Netflix, Amazon, all these FANG type names. I wouldn't mind having the Yieldmax funds accomplish my FANG exposure because they're such a large part of the indexes, but giving me the dividends I need to compensate for my margin interest, the dividend yields. These 20 to 40% yields are covering my margin interest of about 5%. So every month I earn about $10,000. We're going to get into the last part. Oh, one more thing. Let me just show you IAP. IAP, we doubled down on that name. We have 2,000 in it. I wish I had more in IAP. It was up 26% on Friday. And I mean, I have the put in it, the sold put for IAP, so I don't want to buy too much of the stock since I'm controlling 6,000 here with the put, but I did add a little bit to the shares here because the share prices are so cheap. It's hard to ignore. Carl Icahn's defending his $2 distribution, so it makes it look like the short sell rumors were unfounded. So those are the 4 stocks, the 4 updates I want to tell you. What we did with TSLA, we're doing nothing. We're just going to buy more on any dips, but just not to make it any more than the allocations of the Qs themselves, not make it any more than 4% of my portfolio. That's what we're doing with TSLA. APLY, we doubled down. IAP, nibbled on shares there, doubled down on Friday. Nibbled with 1,000 earlier in the week, doubled down with 1,000 on Friday. And then I also mentioned PDI and MPW, and I'm thankful to my subscribers for those once again. Thank you for that. And so now, without further ado, I'm going to get into my bills and how I pay them on margin. So every month, again, we earn about 9,000 to 10,000 in dividends. So I'll take you to my complete view and show you my alerts box. Now, it's been messing up, okay? It's been glitching, my alerts box. If I try to click into these things, it's going to mess up the video. I'm warning you. But if we go and view all alerts, you can see here that this fund's transfer request received, that was 3,000 I sent out. I'm telling you, if I click it, it's going to go wrong. 3,000 I sent out there, another 3,000 I sent out here. And then we have all my bills. Oh, well, first you can see all my dividends here. I can't click it. Once again, if I click it, it's going to freeze. I don't know. Sometimes E-Trade glitches like that. But okay, dividends paid again on 5/3, 5/2, automatic withdrawal. That's my credit card. I have an agreement with Capital One. They withdraw money from my account every month. It's all on auto pay. Dividends paid here. And so, excuse me. And dividends here at the end of the month. So dividends come in about 9,000 to 10,000. I can show you here on my estimated income page what each dividend looks like. And again, they're not showing APLY, I don't think, because APLY has not set its dividend yet. But this number should be a little higher after that comes through. So we're making about $3,500 a month in each cornerstone fund, $3,500, which is dripped at NAV, which I've shown you in past videos. We just got our drip for this month, so we got an instant 15% gain there on the drips. I'll show you if you stick around till the end of the video. Here's TSLA, $250 dividend. So that probably got cut significantly from the recent dividend cut, but I don't mind because I also feel like dividend raises could come as the stock bounces back and the volatility resumes in it. So I'm not worried about this again, and I'm just going to buy more shares anyway, rebalancing my shares, not going crazy with it, just rebalancing my position back to 10, back to 10, back to 10. If I'm down 1,000, I rebalance. This helps me keep rebalancing my dividend yield as well. So TSLY, these are all the dividend payments that we get, and again, they add up to about 9 to 10,000 per month in dividends. And then the bills that I have, which are about 6K in bills, go out every month. And so I'm left with about 3 to 4K of margin pay down. So my margin falls by 3 to 4K per month, and my account grows by 3 to 4K per month. So I'm not only using this to pay my bills and live freely, financially free in life, but it also pays down my margin each time, ensuring growth and progress. Now, you might ask, how come my margin is still high right now? It's because, again, I'm adding these Yieldmax funds into the account when I should have been on my plan to pay down this whole cycle of debt. I just went ahead and added more because it's a free country. I can do whatever I want with my margin. It was a bear market in 2022, so it's the time to use more leverage, in my opinion, to bet on shares. At least I'm not doing it at the top. Everyone thinks this is the worst time to do it because we're facing a recession. I'd rather do it now than use all this margin at the top when share prices fall. Most of the downside is out of these stocks, in my opinion. So the reason why my margin doesn't fall right now is because, again, I keep adding to it by buying these Yieldmax funds. Also, I bought 5,000 of PDI on Friday. So that added 5,000 more to my debt that I didn't need to have. But at a 15% dividend and 5% interest, it pays me it pays me to be in margin. I'd be a fool not to be in margin, in my opinion. Plus, I think bonds are coming back, and this is a good time to be in bonds. Once again, I'm going to take leverage out at these lows rather than the highs. Let me show you the chart of PDI. You tell me if you wouldn't put an extra few thousand in margin into this fund when it pays 15% dividends. And if you look at it on a 1-year chart, you can see how depressed it is on its chart. So I'm using the leverage down here, not at the highs. So anyway, 14.5% dividend. Thanks again to my subscriber there. I'm not going to say y'all's names. I just, I don't like to name drop, but I really do appreciate you guys. You know who you are. I made some very dear friends already through this channel, and I love it. Please keep commenting if you have any other videos you want me to cover, by the way. But yeah, that's how I pay my bills. It just is all automated. The bills, it's all taken out of my debt. Even the margin interest comes right out of my debt each month, and my debt falls. I still have enough money to not only cover my bills and interest, but I still get ahead by 3 to 4K per month. It's just that right now I'm adding more leverage because of the opportunities that I see in the market and in these Yieldmax funds. Even if they fall, the Yieldmax funds, we just hold the dividends long enough, they pay for the investment. That's what we do with all of our investments. We just cash flow them. We don't care what they're doing up or down, what's happening in the news. We just make sure they represent what the proper allocations in the indexes. So we live with whatever happens there, and then we just let the dividends cash flow the investment. So anyway, that'll do it for this video. Again, if you have any other questions, leave them in the comment section below or email me at aikentod48@gmail.com, and I'll talk to you soon. Thanks.